Thank you for joining this Blockchain Co-Investors webinar. This is our annual predictions. We look ahead to 2024 and make some predictions that we believe are important and capture the essence of what we're going to experience. I have to show you this page. We're a fund manager. This is educational only. We're sharing our perspectives. Please don't rely upon anything we say for investment decision making. And if you are interested in any of our funds, please reach out to us and rely upon the separate information you would be given. This is who we are. We've been investing in blockchain for about 10 years, and before that for 20 years in internet and fintech. We manage a good number of funds at this point, and most importantly, we are partnered with most of the leading blockchain venture capital firms in the world, and that's what gives us broad global early stage exposure. At the bottom, we are invested in actually closer to 1,000 companies now, blockchain equities and tokenized projects, and within that, about 75 or more of the blockchain unicorns. These are our venture partners, and we've spoken to them on a regular basis ever since we began to partner with them, in some cases 8 and 9 years ago, and some of their perspectives are incorporated into this year's predictions. This is how our funds do. Very good venture fund of funds like Eclipse and Harborvest have done exceptionally well over the last few years, but I think you can see our first fund has way outperformed most of them. And these are the 75 blockchain unicorns. And similarly, we do speak to the CEOs of many of these on a regular basis, and some of their perspectives are also incorporated into this year's predictions. We'll return to this later, but we have a very simple value proposition. Our investors can make a single investment, and we will give them global diversified exposure to the leading early stage blockchain venture investments, all on an institutional platform. And that represents unique access, a broader diversification, which is very important in the venture space. And you've seen the performance and persistency of that performance. And we do believe everything should be institutional, both in terms of quality and compliance, but also in terms of cost. 10 years ago, we wrote this down. It's our investment thesis. After 25 or more years working on the internet and the digitalization of communications and content, it was very clear in our minds, and factually today, 10 years later, it's even more clear that that was the greatest value creation event the world had ever seen. However, we did not yet get round to digitalizing monies, commodities, and assets. And as a result, most of our transactions and most of our investments are, if not paper-based, certainly on technology that is not fit for a digital economy. So we have to digitalize commerce too. And the only challenge with all of that is that we have to upgrade all of the world's financial infrastructure. And since everyone transacts all the time, that means a great deal of work for governments, as well as businesses and individuals. But our view is this will be the greatest value creation event ever, because commerce is so much bigger than communications and content. This investment thesis you can listen to or download separately. Just let us know if you're interested. But the reason I'm sharing this right now is because it does inform the types of things we care about when we are creating our predictions. We are gauging the degree to which the world is moving towards this investment thesis. And the good news is that we believe 2014 will be an inflection point, and that the adoption and the progress towards a truly digitalized global economy is now accelerating. So this is the overarching theme of 2014, and we'll be sharing more about that. These were the 2022 predictions, which means they were for the year 2023. And I'm glad to say that we got most of them right. We've been doing these predictions every year since we created Blockchain Co-Investors, and every year we get most of them right, but not all of them right. And when we go through these predictions for the coming year, 2024, we hope that we'll get them all right, but obviously this is not a game in which you can be 100% accurate. I won't go through all of these on this page. There are some point predictions, and there's other trend predictions. But we're actually going to start off with something that we think is much more important. For investors, we need to be constantly thinking about, have we seen something before? And can we gauge the direction of investment value creation making? And we think you can. We think that we are now entering a year, 2024, which we've seen before, not in the context of blockchain specifically, but in terms of the overall dynamics of investing. We've been here before. And the reason for that is that we experienced back in 2001 and 2002 years that were very analogous to 2021, 22, 23, and now 2024. We experienced the dot-com crash. And just to remind you what happened, back in the 80s, and in fact the late 70s, a new technology was stood up, a new technology stack started getting deployed. We called it the internet. It's not one thing, it's many things, and they work together. And by the 90s, we had a few use cases surfacing, but frankly, we didn't know too much about what we were going to make a use of vis-a-vis the internet. We knew that we could share information, we could communicate over it, but that was where the thinking was at that point in the early 90s. By the mid-90s, electronic commerce was beginning to appear in a very basic format. And by then, we saw a few companies. Amazon went public in 1997 at $18 a share. AOL was eventually sold in 2000. By 2000, a lot of dot-coms were being created. We would say that Alan Greenspan's notion of irrational exuberance was definitely true. Valuations went sky high, and many companies were going public even though they didn't have positive cash flow, and some of them didn't even have revenue. All of that came crashing down at the sort of middle to the end of 2000. And by 2001, the beginning of it, a lot of people thought that this had all just been a bubble. Of course, it wasn't true. Innovation didn't stop. In fact, it accelerated. Valuations had hit an all-time low in the middle and end of 2001. But the best investors in the world carried on investing into this new technology, and they became some of the highest performing funds in the world. And we know their names, the Sequoias, Andreessens, Kleiners, and so on. If you had held on to your Amazon stock that you got in 97, and if you had held it until, in this case, the end of 2022, you were sitting at a 320x, a 31,000% return. Just to give you a sense of how much value creation was created over this time frame. So this is, where things were in 2001. In 2001, the world was turning against the internet. Major newspapers were saying it was just a passing fad, it was fraud, and there were a lot of critiques. It's too slow, it's too costly, it will never work properly. There are too many scams, it's used for illegal activity. Charlie Munger, Warren Buffett's partner, famously said, it's really not very good for much, and it will probably make most American businesses less valuable and less profitable. And senators on Wall Street and congressmen wanted to ban the internet, and they carried on wanting to ban the internet all the way through to the Stop the Internet Now campaign in 2012. It's easy to forget this, but that was the state of the world and its view on the internet at just after the dot-com crash, the year after. Of course, the adoption was only just beginning. And so if you look at this chart, in the year 2000, the world as a whole hadn't even got to 10% adoption rates. It was lower than that. Probably 7 or 8% of the world was connected online. But just to give you a sense, the electronic commerce adoption rate of the world was only 2 or 3% in the year 2000. America was way ahead. You can see that in the green line. We were approaching 50% online, and that's because we had pro-innovation regulation. But the rest of the world, the adoption began to steepen. In the zeros, we began to discover electronic commerce. It's easy to forget that it took almost another 10 years before we had things like iPhones and apps and downloadable content. Those really didn't arrive until 2008 or 9. And today we are still discovering applications for digital communications and content. Fully 30 years on this chart, but you can add in the extra 10 years before, and you're talking about a 40-year time frame with adoption curves still going up. Today, we only have about 2/3 of the world online, and we only have about 40% of the world using electronic commerce. So the Amazons and the Apples and the Microsofts and the Tencents and Alibabas potentially have a long way still to go. Well, this is past, but we think this is the first prediction that this is exactly where we are with blockchain. Blockchain just went through its dot-com moment. The underlying adoption is exceptionally low, but all of the adoption curves are now beginning to steepen, and other predictions will talk more about this. But to finish off this first prediction, the big question mark is you should perhaps think about what should you have done as an investor in 2002 and 3 and 4. And that's what we think we should be doing in 2024, 5 and 6. And that is essentially to place capital into the new emerging companies, the emerging companies that became Facebook and Airbnb and Uber and so on. The second prediction is that the underlying drivers of innovation are also all at an inflection point. This chart gives some examples. The first, which is what the global media community focuses on, the price of Bitcoin or the price of the crypto alternative assets, is for us an irrelevance. It's not an input variable. Price doesn't drive innovation. Price is the result of demand and supply around innovation. The other things are more drivers, and there are many more we could have shown. Here we have the global interest in the innovation in the sector, the developer activity and the degree to which they're creating new code, new software, new use cases and ideas. And then the final one is the degree to which projects and startups are being funded. But I could have shown you other things, the underlying adoption of the technologies, the major use cases and how they're growing. We could have talked about the hash rate or other things, but these will suffice. And the point of this page is that all of the adoption is looking fundamentally, the drivers of innovation are looking fundamentally sound and are growing fast. And we think they're at an inflection point. We think at this point, the world is very aware that a new technology is coming, a technology that will digitalize all of the world's finance and commerce. We think that a generation of the best software engineers and developers have invested a lot of their personal time beginning to understand how to use distributed ledger technology, and they're unlikely to go back until at least we create a better database methodology. We think the best one that we have in the world is distributed ledger, and it's becoming increasingly valuable for reasons we'll talk about in a moment. And then in terms of funding, this one is also very interesting. It's also a little bit confusing. All of the venture statistics that you'll read about online and in the media are averages. They average together early stage, mid stage, and late stage. So just as in the dot-com crash, it looked like venture activity was way down, and it certainly was in terms of the capital invested. Averages lie. The early stage activity persisted. The best internet venture capitalists continued to invest. And the same is true in blockchain. All of our funds, most of which are early stage funds, are actively now backing startups once again, and they have been all this year. They took a little bit of time off at the end of last year when we weren't sure what the contagion from the trader community was going to be. And as we know, most of the bad news of last year was about trading in the public markets. It wasn't about blockchain venture. So this is the second prediction, that the fundamentals of innovation are themselves at inflection point. More engineers working on more use cases, more early stage deals getting funded. And we know what that eventually leads to. Some percentage of every vintage of backed early stage companies turns out to be very valuable. And in that regard, this page shows it, but it's very, very different from, for example, public equity investing. In public equities, you can buy Amazon today, sell it tomorrow, buy it the year after, sell it the year after. It's fungible. It's a share of Amazon. It doesn't change. What's different in venture is if you back a vintage, for example, here, 2003, you might have caught DocuSign or Tesla in your early stage investment. If you do another round of investments in 2007, you're not going to catch DocuSign or Tesla because they won't be early stage investments. Maybe you'll catch Lyft, Dropbox, and Zinger in this case. So unlike public equity investing, venture investing, if you're going to have comprehensive exposure, you have to dollar cost average throughout the innovation cycle. You have to continue to back vintages, and that's what we do. The third prediction is a little bit more of a point prediction. We're predicting that the adoption of crypto wallets will exceed 500 million worldwide by the end of 2024. Now, this is what our prediction is around uniques. This chart is actually about the number of wallets, and that is not quite the same as unique. Some people have multiple wallets, some people have a lot of wallets. For us, it is important to track crypto. As I've already shown you in our investment thesis, we focus on digital monies, digital commodities, and digital assets, essentially digital finance. However, crypto in that regard is a subcategory. Crypto is a subcategory because you can have traditional products from traditional financial companies that can also be digitalized, and they are also a subcategory of what we focus on. So we track crypto because it is the leading edge. Crypto, by definition, is digital natives, digital wallets, and digitalized products and services, and it gives us a good indication of where everything's trending. Right now, we have probably 400 or so million people that have already adopted a crypto activity. And to put that into context, as I've already pointed out, that's roughly the same as electronic commerce just after the dot-com crash. But the curves are steepening, and for some very good reasons that I'll talk about in a moment. And we would predict that about 500 million people will be actively buying and selling crypto assets by the end of 2024. Now, we think, too, that will begin, the acceleration will begin first and fastest in the developing world. And there's some very clear reasons for that. This is one of our 2020 predictions. And back then, we made a very simple point. If the issue is that you live in a land where you don't have sound money, such as on the left of this page, in Argentina, in the top left-hand corner, that big stack of money wasn't even worth the same as the toilet roll when this picture was taken. And in the bottom left-hand corner, you can see the Bank of Zimbabwe's $100 trillion note. Believe it or not, that's what hyperinflation did to their currency. So if you'd lived in countries like that, which have hyperinflation, expropriation, and the risk that your money isn't sound, then you really get the point that you need alternatives. And those alternatives historically were gold or the dollar. But the problem with the dollar is you've got to keep it in a bank account, and quite likely the same government that you don't trust to issue sound money will also have oversight of your bank account. So the risk is you'll get expropriated from your value. So we had predicted in 2020 that the adoption curves would be highest in the developing world, in Latin America, in Africa, and in India. And that is still true, but this chart really makes it very, very clear. If you look at the countries on the left-hand side, I know it's a detailed chart, those countries are the largest countries in the world, and almost all of them don't have sound money, or they have people that don't count on and rely upon their governments to be a sound place to store all their money. India, China, and then Indonesia, Pakistan, Nigeria, Brazil, Bangladesh, Russia, Mexico, and so on. Really, the only exception in terms of the largest countries of the world where you could argue you have sound money is probably the United States. So on the right-hand side, of the 8 billion people in the world, 60% are digital natives, 45% or younger. That's a breathtaking statistic because crypto adoption is greatest with digital natives. But the second bullet point, 2/3 at least of the people, 5 billion of them, live in countries where they don't believe they have sound money, or they don't trust their governments to hold their money. And we think those people very much understand and are beginning to understand why this is an alternative for them. Now, there's 5 billion people, and we're only predicting 500 million of them will actively engage in the crypto space. But as you're about to hear, we also think that many of these people will be exposed to the digitalization of monies and assets very quickly. And this is our fifth prediction. It is that central bank fiat CBDCs, central bank digital currencies, will proliferate in 2024. To give you some numbers, it's already true that we have about 25 central bank digital currencies in full pilot. By the end of 2024, we think at least 15 of those will be in their rollout phases. China already has theirs. Brazil, India, Mexico, Nigeria, Pakistan, and Russia are all examples of countries that we expect to move into the rollout phase for central bank digital currencies. Now, in some cases, they're wholesale, in some cases, they're retail, and in some cases, they're both. So that they're not all the same thing. But the big so what of this page is that when you add up the populations of those countries, that means in 2024, 4 billion people will be told by their governments that digital wallets and digital monies are in their future. And we think that is exceptionally important, not just because it is preparing and readying the next phase of the acceleration of adoption of our investment thesis. It's also sort of tipping them off that these things are possible. And basically some percentage of those people will choose to use decentralized distributed monies such as Bitcoin. There's a very clear reason why all of these countries are doing this, and it's because they don't want their citizens to move off and begin to put lots of their value in Bitcoin or Ethereum or other things. In fact, as we know, China is very unhappy about its citizens using Bitcoin, though they've begun to loosen up in Hong Kong in the last year or so. And that's part of the reason why they deployed, we believe, a Chinese digital yuan. Now, the US progress on this one, we think, will be much slower. There's some reasons for that, not all negative. We think that in the United States, freedom and privacy are viewed as very important. And there are some legitimate concerns that if your government has a digital money, just in the same way as with digital communications, conceptually, your government could listen in to what you're saying. Well, with the digital money, they can listen in, if you will, to what you're doing, what you're spending your money on. And perhaps that means that they'll be more efficient at collecting taxes, but maybe it's a little bit more negative if they can cut off your spending if you're not doing the things they want you to do. So there are legitimate concerns, we believe, surfacing around whether the US should have a government-issued central bank digital currency. And that debate, we think, will slow things down here in America. However, that doesn't mean America can afford to do nothing. And here's why. In the top left-hand corner, at least through about 2018, you can see what was the global reserve currency. It was the US dollar. The euro was a long way behind, and most other currencies didn't really figure. The international settlement system for the US dollar is SWIFT, and SWIFT is a very old technology platform. It's really a messaging service that was created to run on faxes between banks, and it's been upgraded over time, but it's still pretty basic from a technological perspective. It does facilitate international trade globally around and in the US dollar. Most countries have to believe that that is a neutral technology. And in fact, unfortunately, we decided to break that trust because the US eliminated Russia's SWIFT access. And when we did that, maybe we had good reasons for doing it vis-a-vis Russia, but the rest of the world watched and said, this has now just become a matter of national security for us. Because if we're China, we can't be running all of our international trade on SWIFT if we can be essentially turned off by the actions of another country. So for other countries, SWIFT is no longer a trusted, viable solution in all scenarios. So now we have a world in which every other country in the world, which and many of them are already issuing central bank digital currencies, now they need a transactional system that will facilitate them being able to transact without passing through dollars. And on the bottom of this page, this is an example. The Bank for International Settlements and the Hong Kong Monetary Authority, working with China, Thailand, and UAE, is working on a pilot of something called MCBDC Bridge. All you need to know about this is it is an interoperable platform that allows one central bank digital currency, such as the Chinese one, to be counter-traded with another central bank digital currency, such as, for example, in the United Arab Emirates. Well, if you generalize that, what we're really talking about is a global counter-trade system in which central bank digital currencies can be traded for each other without passing through the US dollar. And if that's not obvious enough, let me just spell it out. That means that the US dollar, which has been the global reserve currency greatly to the benefit of the US, may be disintermediated. And certainly if you were China, that would make sense, of course. Why, if you're trading between China and India or China and Brazil, why do you have to put it through dollars? So this is going to have severe consequences for the US's stance, and we think it will accelerate the US's stance. But it will also do this. Prediction number 6 is the private sector US stablecoins will exceed 250 billion by the end of 2024. We're already sitting at about 120 billion. So we think stablecoins issued will probably double in 2024. We think this is quite a bold prediction, but the demand is certainly there. Right now, Circle and Tether, which are the two largest US backed stablecoins, represent the bulk of this, 85%, and they're growing fast and they're exceptionally profitable. But around the world, I already indicated that for many people, the dollar is their preferred backup currency, if you will. And in terms of trade, it's their first choice. So a digital dollar becomes their preferred means of their preferred money, but it needs to be digital. And if the US government won't issue a digital dollar, then we think the private sector will. PayPal's already announced theirs. We know many of the world's biggest banks that are often US banks are preparing their own versions of digital dollars. The regulatory background for this is still a little bit unclear, but we do expect in 2024 we'll see more stablecoin announcements, but we'll see a lot more stablecoin issuance. And if it's not being issued by, for example, big banks, it just means that Tether and Circle will grow all the more faster. Our 7th is a different type of prediction. This is one of those wild cards that has come out of the blue all of a sudden, and we think is going to absolutely spike distributed ledger usage and deployment and adoption in 2024, and it's AI. I know everyone's talking about AI. We know that AI isn't new, but it has reached an inflection point. It's sort of like the iPod, iTunes moment. If you went back then, it was possible to download music in digital format and put it on a hard device and carry it in your pocket. But it was very, very difficult to do all of that. And most of us didn't know how to. And all of a sudden, Apple turned up with a very simple device, easy to use, and iTunes on your computer. And we all started downloading music. And all of a sudden, we could carry all of our music in our pocket instead of 6 or 8 or 10 CDs and DVDs when we decided to travel or when we were in our cars. That was an enormous transition around the notion of digital content and downloadable portable digital content. And we just had the same moment in AI. Databases, big data analytics, algorithmic decision-making, machine learning, AI, all of these things have been worked on for 30 or 40 years, and they've been hot at times and cold at others. But what ChatGPT just gave us was an exceptionally easy user interface and user experience. You just drop some words into a navigation and outcomes, some answers in seconds. And the quality will get better. The use cases will grow, but it is clearly an exceptional moment. Well, the whole world is talking about the positives of that. We have to consider the negatives. All technologies can be double-edged swords. They can be used for good purposes. They can be used for bad purposes. And unfortunately, as we wrote in our book almost 10 years ago, the internet is fundamentally flawed. The internet is very insecure. It lacks systems of identity and trust. It has become highly concentrated, which is a somewhat different issue. And then, as we've already talked about, the commercial aspects of the internet have to run over old payment rails or use paper-based approaches. Well, unfortunately, we think the biggest single use case for AI in 2024 is going to be bad actors accelerating their bad practices. We fully expect that the number of global database breaches, scams, hacks, large-scale marketplace manipulation, phishing is going to be 10x or 100x by AI. And if you were a bad guy, you're not going to send emails handwritten from Nigerian princes anymore. You're going to have highly sophisticated AI software trying to engineer positive outcomes for you, which basically are negative outcomes for everyone else. And we think that means that blockchain becomes extremely important and relevant for all of us. The reason being that Satoshi Nakamoto created blockchain as a solution to the fundamental flaws of the internet. The peer-to-peer white paper was about enabling a global, distributed, digital form of value transfer, which was called Bitcoin. But in order for that, it needed to run on the internet, and it needed, therefore, to have a set of innovations to complete the internet, to make the internet secure and reliable with a new system of identity and trust. And that is what blockchain facilitates. So as AI unleashes more and more damage to the internet, so it will become more and more obvious that we have to upgrade all the world's databases and get them on a more secure and higher quality platform with higher and better versions of identity of people, devices, and content. And all of that, until we come up with a better invention than distributed ledger technology, until we do that, it's going to power the deployment and adoption of blockchain technology. So this is our next prediction. Our eighth prediction is us going a little bit out on a limb, because we're not traders. As I think you all know, we don't do any trading in public liquid tokens. So for us, the Bitcoin price really isn't something we normally think about. And I've already indicated that for us, it's not a driver of innovation. It's not really relevant to early stage venture investing, or it really shouldn't be. However, the whole world is talking about Bitcoin. So here you go. Our prediction is that the Bitcoin price will go to an all-time high in 2024. And there's two major drivers of that. The first is we're coming up to another halving. I won't explain exactly what that is, but I will say that every time we've had a halving, we've seen a spike in the price of Bitcoin. Some people debate whether it's already taken into consideration. We don't think it is. We think that we'll see some price action. Let me just also emphasize, please don't accept this as information upon which to trade. It's just our opinion. The second one is this. ETFs are actually very important. You'll recall that Alice and I worked on the launch of iShares back in the mid-90s. Alison then incubated them when she became CFO and head of strategy at BGI, which is now BlackRock. And it's a very interesting story, because in the first 10 years of iShares, the total of the ETF industry was less than 500 billion. It took another 5 years to get the next billion. It took 3 years to get the next billion. And by 30 years in, we're at about 4.5 trillion after 30 years. So it takes time to accumulate assets and for new financial products to take off. In that context, Bitcoin is already moving much, much faster. The total value of Bitcoin is much more at its today's age. It's only 12 years old, as you know. So it's actually more valuable today after 12 years than the entire ETF industry was at its 12-year mark. But the reason ETFs are so important is because many investors, especially professional investors such as RIAs and in Europe, independent financial advisors, they're not allowed to self-custody on behalf of their clients. They need easy approaches, efficient, easy to use, that can actually run through the existing processes that they use. And for them, ETFs are something they use every day, but there is no Bitcoin spot ETF. We still have only the futures products, which are inefficient, very high cost. They also have the risk of contango. So right now, we have almost all of the major US players in asset management lining up to issue spot Bitcoin ETFs. Some of them have now filed to issue spot Ethereum ETFs. And we think that that will be a major driver. Now, I will say we made this prediction in 2020, 2021, 2022, and the SEC managed to hold this off. We don't think they can anymore. As you all have read, the judicial system of America is now involved in this one, and they've in fact described the SEC as capricious and arbitrary in blocking the grayscale transition to a spot Bitcoin ETF. When you're in government circles, it's not possible really for the law courts to say anything worse to you than that you are capricious and arbitrary. So we think that that's a very important court case. And we do believe that we're going to see some action and some issuance of ETFs driving the Bitcoin price. Our ninth prediction is that the US will need to compete globally, and that will require that the US change its stance on regulation of this space. This is a slightly nuanced prediction, but we think 2024 is the year that it's going to come to pass. So far, blockchain was not very important to America. And frankly, it was quite possible for a few lawmakers and regulators to slow it all down because the big institutions didn't really care, and they were not lobbying for the other side of the coin. They weren't lobbying for pro-blockchain innovation, regulation and lawmaking to drive pro-innovation. Well, that's all about to change. And the reasons are, firstly, this page. Every other major financial center in the world is now passing pro-innovation regulation for our space and for our investment thesis. Coinbase says 80% of the G20 have already passed at least one piece of pro-crypto or pro-blockchain regulation. Here in the UK, where I'm recording this webinar, we met with the key committee of the UK Parliament, and they are passing as much regulation as they can. They view it as absolutely critical to the future success of the City of London, of the UK economy, that they be a digital finance hub. So just as we've had in the past digital innovation hubs, now we're going to have digital financial hubs, and they want to have one, if not one of the leading ones in the UK, just as an example. Well, it turns out every other jurisdiction is feeling the same way, and that's why our regulatory tracker is beginning to light up green. These are the top 25 global financial centers, and the ones in green are already passing that innovation. Well, you can download this, but the reason it's so important is actually this page from Pantera. It's because they know what happened last time. They know, and this is on the left-hand side, that when the internet was being rolled out, America passed rapid pro-innovation regulation. It's why the adoption curves I showed you earlier on were so steep in the US, and why we were so far ahead of every other part of the world. And it's why we ended up capturing a disproportionate share of the most valuable companies in the world. This is now a few months old, but you can see at the bottom, the United States captured 78% of the market cap of the top 15. China got all the rest, and the rest of the world, every other country in the world got 0 of the top 15. And you know, because you've followed it, even from a tax perspective, most of the EU, for example, gets very little tax payments from the Googles and Facebooks and so on of the world. They're not happy about that. Well, they don't want to miss out again. So what's going on in blockchain is the other way up. The US has been very slow to issue any regulatory guidance, and the rest of the world is capturing the opportunities. So the blockchain protocols are heavily skewed towards places in the rest of the world, like Switzerland, Singapore. And this is not just happenstance. This is because all the other lawmakers and regulators in every other part of the world don't want to miss out again. So they're passing this pro-innovation regulation, and the rest of the world's winning, and America is not, and China isn't either. So why is 2024 going to be an inflection point? It's because now blockchain is clearly important and is becoming important to the US's largest enterprises. Its banks, its asset managers, its payment system operators, its exchanges, and its multinational corporations. And they know now that they need digital finance. And so they're going to start lobbying aggressively, as Larry Fink has already begun to do. And all of that's going to show up in 2024. And that's what drives the needle of US political thinking and US lawmaking and regulation. It's when the big players say they really, really need it for a matter of national competitiveness. And this is now a matter of national competitiveness. And then finally, our last prediction for 24 is also a look back. We know that venture returns are consistently higher in the years that follow a downturn. And so this is true also of private equity, more broadly defined. So private equity, including both buyouts and venture. But if you look at this chart, what you'll see is after 2001, we saw or after the dot-com crash, we saw a spike in returns for the vintages 2001, 2, and 3. And after the great financial crisis, we saw a similar spike in returns that lasted a bit longer. And the reason for this was several-fold. The first is lower valuations, and we're seeing that right now. So it is past this prologue. Here we are in 2023, entering 2024, and valuations have fallen dramatically. And all other things being equal, you would expect the vintage returns to be higher. But of course, all things aren't equal. This period is also being blessed by all the accelerating adoption and other matters that I just went through. So 2024 stands out as being a year that should be very good for new early stage investments. The other points are also very important. Decreased competition makes it a good time to start a startup if you can get funding. Many startups will not get funding, so there'll just be less startups being funded in 2024. But secondarily, most VCs withdraw support for a good portion of their portfolio, and they concentrate on the ones they have highest conviction in, which means if you have a startup with high conviction, you're going to get less competition and more support from your venture backers. The regulatory outcomes are also important, and there's a subtle point here, which is if you're a startup and if you already have some products and services, it's possible you're going to have to rebuild them based upon whatever regulation is coming out. But obviously, if you're launching a startup this year, you already know what the shape of the regulatory environment is in the EU and the UK and Switzerland and so on and so on. So you can build your products and services de novo to fit the regulatory environment that's just been created. And that's a huge advantage. It's a huge advantage because it's extremely expensive and difficult to redesign a financial product if the regulatory rules change mid-process. And then the last one is that there are some very attractive secondary opportunities. You can buy companies, good companies, that you would have paid 5x for 18 months ago for a fraction of that price, 20 cents on the dollar sometimes. We don't do a lot of that at Blockchain Co-Investors, but we do think there is an opportunity in 2024 that could drive superior returns for investors that re-engage in backing blockchain companies in this year and next. So those are our 10 predictions. Some of them are point predictions, some of them are more trends. But the bottom line of all of this taken together is we're entering the period of fastest growth, the inflection point. It's what happened in 2002 and 3 and 4. We weren't expecting it around the world. Most people thought the internet had just been a big bubble and even a fraud. It simply wasn't true. The same is occurring right now. There's plenty of people that think that digital finance was simply a tulip bulb. It's not true. Every CEO of every major bank, payment company, asset manager, and exchange, and so on, is absolutely of the opinion that it's time to upgrade their financial infrastructure, but it won't be quick. And that's the other point. The adoption is happening fast. The adoption curves are steepening, but we're still talking about 10 and 15 and 20 years. And here we are with the internet 25 years later, we still aren't at 100% deployment. And that will be true in the case of digital finance, and that will be the case in the use of blockchain technologies. So our investor value proposition is very simple. I told you it before. We can't talk about our funds on a public presentation, but please do reach out to us if you want to learn more about our unique value proposition. That we believe we're the only people in the world that can offer you what we have, and we think that it's quite valuable. If you want to learn more about anything I've said, this presentation will be on our website. There will also be the written version in our newsletter. We would love it if you would share these 10 predictions with everyone you know, because we want to get this word out. The press has been negative for too long, and they've missed the wood for the trees. We're sitting in the middle of one of the most important and perhaps the most important technological transformation of our lifetimes, and the adoption curves are steepening. 2024 is set up to be a very good year, but the press would like us to believe that it was all a bubble and that a few errant fraudulent traders were all this was about, and it just is not so. Thank you for staying on till the end. Really appreciate your participation. And just let us know if you have any more questions. And with that, I will close down this webinar.